Alright, welcome back to my videos. So on this video, we are going to learn about bank reconciliations. So when we talk about bank reconciliations, we are actually reconciling the company's account cash in bank. Specifically, the company's current account, or also known as checking account. So what is a bank reconciliations? And who prepares the bank reconciliation? Is it the company or is it the bank? And how often do we prepare this bank reconciliations? You probably already know all of the answers on those questions, but before we answer all of those questions, let us take a look at what's going on with the company's records as well as the records of the bank. So I call this the company's activities and the bank activities. Alright, so let us take an overview about the company's activities as well as the bank's activities. But let's start with the company's activities. So one of the activities that affects the cash in bank account of the company is when a customer pays the company. Let's say here we have a customer. Alright. When the company collects from the customer, the company will record that as debit to cash in bank and credit to accounts receivable. Alright, let me repeat that. When a company collects money from its accounts receivable from a customer or from other companies, the company will record that as debit to cash in bank and credit to accounts receivable. And eventually, the collections, the company will deposit this to the bank as part of the company's internal control. So the company will deposit that in the bank. All right. Some companies, though, when they collect money from the customers, they debit cash on hand and credit to accounts receivable. Then eventually, when they deposit this money to the bank, they debit cash in bank and credit cash on hand. Some companies, they directly debit cash in bank and credit accounts receivable. So when the company hasn't deposited these collections but already debited cash in bank, meaning to say the company already increased the company's cash in bank account and this deposit hasn't reached the bank, then there will be a difference of the company and the bank's balance. Okay, so these undeposited collections will be called as deposit in transit. All right, so when the customer pays the company will increase the cash in bank and credit the accounts receivable to cancel that accounts receivable. Then eventually the company will deposit that collections to the bank. And once the bank receives that collections or that deposits, the bank will increase the company's bank account balance. Then there will be no problem. Now, there's another transactions that affects the company's cash in bank account, and this is when a company draws a check to pay its obligations, let's say for example to a supplier. Okay, so we have the company here pays the supplier, so the supplier is the payee. So when the company draws a check to pay its supplier, then the company will record that as debit to accounts payable and credit to cash in bank. All right. Then eventually the supplier will go to the bank to encash the check. Alright, so the other transactions of the company is when the company draws a check or writes a check to pay its obligation, for example, to the supplier, the company will record that as debit to accounts payable and credit to cash in bank, so decreasing the amount of the cash in bank. Then eventually the supplier will go to the bank to encash that check. So when the bank receives that check, the bank will decrease the company's bank account balance. Now, the difference will occur when the supplier, who is the payee hasn't gone to the bank to encash the check. So this check is still in the company's account balance, and this check is what we call outstanding checks. So this is also one of the reconciling items in our bank reconciliations. Alright, now let's talk about the bank activities. So aside from the companies depositing the money or the collections to the bank, where the bank increases the company's bank account balance, and the company's drawing of the check to pay its obligations, where the bank decreases the company's bank account balance, there are other activities of the bank that may increase or decrease the company's bank account balance without the company's knowledge of the activities until the bank issues what we call credit memos or debit memos. So what is this credit memo and debit memos? Credit memo is a message of the bank to the company, notifying the company of the activities of increasing the company's bank account balance. And debit memo is also a message of the bank to the company, notifying the company of the activities that deducts the company's bank account balance. Alright, so what are these credit memos? Some examples of activities or transactions of the bank that requires the bank to issue a credit memo to the company. Alright, these are examples of a credit memo. Collections of a notes receivable. The company sometimes gives a right to the bank to collect its notes receivable. So when the bank collects that notes receivable or those notes receivables, the bank will increase the company's bank account balance. Proceeds of loans. For example, the company is trying to borrow money from the bank, and when the bank approves that loan, the bank will increase the company's bank account balance. Interest earned also increases the company's bank account balance. Mature time deposit also increases the company's bank account balance. So therefore, credit memo will increase our cash in bank balance. Alright, so that's our credit memo. Now, let me give you an example of a debit memo. A debit memo is a decrease on our cash in bank balance. Some examples of debit memo. Alright, some examples of debit memos or some examples of activities where the bank is required to issue a debit memo to the company. BSC is bank service charge. We all know that everything that the bank does, they charge the company. And also NSF checks. NSF check is not sufficient funds. When the customer issue a check to the company and the company deposit the check to the bank, but the customer doesn't have enough money on the customer's bank, then this will be a non-sufficient fund check. The bank will give this check back to the company. checks. Examples of a defective checks is when the amount in words is not the same as the amount in numbers. Then that will be a defective checks. So the bank will give it back to the company. And payments of loans. The debit memo will decrease our cash in bank. Alright, so this is your company's activities versus our bank activities. So remember these activities because we are going to use these activities when we get into our bank reconciliations. So the reconciling items where the company's activities are deposit in transit and outstanding checks. So the company already debited the cash in bank on deposit in transit while the bank has not increased the company's bank account balance. That's why it's called deposit in transit. In the outstanding checks, the company already credited that cash in bank, so decreasing the cash in bank. While the bank activities, we have our credit memos and our debit memos. So these are the 4 reconciling items that we are going to use on our bank reconciliation. Now let's talk about bank reconciliations. Now bank reconciliation is when you reconcile the cash in bank records of the company from the general ledger and versus the amount of the bank records from the bank statement. Now, in bank reconciliations, we have 3 methods, okay? Alright, these are the methods of a bank reconciliations. We have the book-to-bank methods, the bank-to-book methods, and the adjusted balance method. So we will start with the adjusted balance method because this is usually, most companies usually use adjusted balance method. Okay, so on adjusted balance methods, we are going to start with the per book balance, and we're going to start on the part of the bank. Alright, now this is the adjusted balance method. So with adjusted balance methods, we are going to start with the per book balance. This part right here, this is the company's record, and per bank balance obviously is the balance or the bank records. So this amount right here per book balance, this is coming from our general ledger, the company's general ledger. The per bank balance, this is coming from the bank statement. Okay, so the bank issues a bank statement while the company prepares for the bank reconciliations. Alright, so from the bank statements, this is where we get the amount. Remember all the reconciling items that we discussed, the activities of the bank and the activities of the company, where the company's activity will be the reconciling items of the bank balance, and the bank activities will be a reconciling items per book balance. So what are the activities of the bank balance? The bank's credit memo increases the company's bank account balance, so per book we are going to increase or add credit memo. Alright, there's another activities of the bank, which is the debit memos. Okay, the bank decreases the company's bank account balance, so on the per book balance we are going to decrease the per book balance with the debit memos. Now, the activities of the company that wasn't recorded by the bank will be our reconciling items of the bank balance. So what are the activities of the company? The activities are the deposit in transit and the outstanding checks. On deposit in transit, the book or the company added this deposit in transit to the book balance. Therefore, we are going to add that to the bank balance. Alright, another activities of the company is the outstanding checks. The outstanding checks was deducted in the book balance, therefore we are going to deduct that from the bank balance. Now, there's another reconciling items on both. This is what we call errors. Errors are mistake. So whoever commits the errors or whoever commits the mistake should correct that error or those errors on their books or on their records. So when the book or the company commits the error, the company should correct that error or those errors on the balance per book. So these errors can be deductions or should be added to the balance of the book. And this should be our adjusted cash balance. Alright, per bank balance. So any errors committed by the bank should correct by the bank on the bank's records. So per bank, it's either plus or minus of the errors that's committed by the bank. And this should be the adjusted cash balance. So these are your reconciling items using the adjusted balance method. Per book, we added credit memos that was added by the bank or the bank activities, and we deduct debit memos where the bank deducted from the company's bank account balance. And any errors of the book or the company should be corrected by the book or the company. So all in all, this is we come up with our adjusted cash balance. Same way with the bank. The bank balance, this amount comes from the bank statement, and because the book debited the cash in bank on the deposit in transit, we are going to add this deposit in transit in the bank balance. On the outstanding checks, the company's activity already deducted this outstanding checks, so on the bank balance, we are going to deduct the outstanding checks. And any errors committed by the bank should be corrected by the bank. And we come up with adjusted cash balance. And this adjusted cash balance by book and adjusted cash balance by bank should be equal. And this is your adjusted balance method. Alright, let's talk about book to bank method. So on this method, book to bank, the book balance, we are going to reconcile the book balance to come up with the bank balance. Alright, so this book balance right here, this is coming from our general ledger, the books of the company, and this amount right here is coming from our bank statement. Remember all the 4 reconciling items, the company's activities and the bank activities. On the bank activities, we have the debit memo and the credit memo. On the company's activities, we have the deposit in transit and we have the outstanding checks. So all of this 4 reconciling items, we are going to consider these 4 reconciling items on this method. Okay, we are going to analyze whether we are going to add or minus those reconciling items on this method. Now, let's see a fresh start. On the books, the company, for example, deposited a 100,000, and on the bank, when the bank received that, it records 100,000. All right. Let's say, for example, The bank collected a notes receivable on behalf of the company. So when the bank collected the notes receivable, the bank will increase this amount 100,000. Let's say, for example, the bank collected a 50,000 notes receivable. So 50,000 of notes receivable. So what is this notes receivable, or what is this activities of the bank? This is credit memo. So the credit memo will be added, 50,000 will be added to the book balance to come up with the bank balance, to equalize the bank balance. So when the bank recorded a credit memo on the bank account, the book needs to record that credit memo to come up with the bank balance. So on this, we will add credit memo to the book balance, all right, to come up with the bank balance. Now, another transactions of the bank, let's say, for example, the bank charged the company bank service charge of, let's say, for example, 5,000. So as far as the bank is concerned, the amount of the cash in bank or the company's bank account is now 145,000. Bank service charge, which is actually a debit memo. So the book will then this is minus 5,000 to come up with the 145,000. So far right now they are equal. Okay, to come up with the bank balance of 145, the debit memo should be deducted from the book to come up with the bank balance. So right here, from the book balance, we will minus the debit memo. On the book balance, we have what we call deposit in transit. In deposit in transit, the book already debited cash in bank. Okay, that means the book increases the amount of the deposit in transit. For example, we have a 10,000 deposit in transit. So we added the deposit in transit on the book. So we come up with 155,000. So to come up with the 145,000, this deposit in transit that the company recorded on its book, we will deduct we will minus the 10,000 deposit in transit to come up with the 145,000 bank balance. All right. So as now they're equal. So meaning to say the deposit in transit where the book debited or increased the amount of the balance, we will minus the deposit in transit. Another reconciling item is the outstanding check. So what happened to the book with the outstanding check? The book or the company credited the cash in bank, so meaning to say it decreases the amount of the cash in bank account of the book or the company. This amount, let's say for example, we have 15,000 outstanding checks. All right. So let's say, for example, we have an outstanding checks of 15,000. So what happened to the book is the book credited the cash in bank, meaning to say they minus or deduct this 15,000 on the book balance. On the outstanding check, we have to add it back to come up with the bank balance. Because this method, we have the book balance to come up with the bank balance. So we added back our outstanding checks of 15,000 to come up with 145,000 to be equal on the bank account balance. So meaning to say we added back here our outstanding. So this is your book to bank method. All right, now let's talk about bank to book method, where the bank balance right here is reconciled to come up with the book balance. All right, then remember the bank balance comes from the bank statement, while the book balance comes from the general ledger. All right, let's have a fresh start. So the book or the company deposited 100,000, and the bank will credit the company's bank account of 100,000. All right. Now, the book recorded a deposit in transit, for example, a deposit in transit of, let's say, for example, a 20,000 deposit in transit. So as of this point, the book balance is 120,000 because the book added a deposit in transit of 20,000. Now, the bank still has 100,000. To be able to come up with the book balance, we are going to add the deposit in transit to the bank balance. So we add 20,000 deposit in transit to the bank balance to come up with the balance per book. So this is plus deposit in transit. Now, there's another reconciling items on the company's activity called outstanding check. Let's say, for example, we have an outstanding check of 15,000. Record of the cash in bank is 105,000. To be able to reconcile the amount of the bank to the book balance, we are going to deduct the outstanding check to the bank balance. So we deduct 15,000 outstanding checks to come up with the book balance. So here we are going to deduct or minus the outstanding check. All right. Now let's go to the bank activities, where the bank has credit memos and debit memos. So on the credit memos, the bank added these credit memos to the company's bank account balance, but not the book. So let's say, for example, the company collected a note receivable on behalf of the company. Let's say, for example, we have a 50,000 credit memo from collections of the notes receivable. So the bank added that to the amount, and this becomes 155,000. Now, to be able to come up with the book balance of 105,000, this credit memo of 50,000 should be deducted. All right? The credit memo of 50,000 should be reversed or deducted to come up with the book balance. So the credit memo will be deducted on this method. There's another reconciling item of the bank activities called debit memo. So let's say, for example, the bank charged the book or charged the company a bank service charge of 5,000, for example. So the bank come up with 100,000 remaining on the company's bank account balance. But to be able to reconcile the bank balance to the book balance, we are going to add back this debit memo. So we add back the debit memo of 5,000 to come up with the 105,000 of the bank or the book balance. So we add back debit memo. Alright, this is your bank to book method. Let's have a summary of the bank to book balance method. So bank to book balance method, where the bank balance is reconciled to come up with the book balance. We added the deposit in transit on the bank balance because on this book balance it's already added. So to come up with this, we have to add this amount to the bank balance. We also added debit memo to the bank balance because on the book balance it's not deducted. It's not deducted on the book balance, but it's deducted on the bank balance. So we have to add it back to the bank balance to come up with the book balance. Now on the credit memo, the bank balance added this credit memo on this amount, okay, but not the book. So to come out with this amount, we are going to deduct this credit memo from this amount to come out with the book balance. And so was the outstanding check. The outstanding check on the bank balance, it's still here, okay? It's still on this amount. To come out with the book balance, to come out on this balance, we don't have the outstanding check anymore. So we are going to deduct this outstanding check from this balance to come out with the book balance. And this is your bank to book method.